Look, if you're in your 20s or 30s and you want to build serious wealth, you're in the perfect position to do it. Not with crypto hype or TikTok trends. Today, I'll show you the smartest way to grow your money step by step. No fluff, just strategy. The earlier you start investing, the more time your money has to grow thanks to compound interest. Let's say you invest just $300 a month starting at 25. By 40, you could have over $100,000 even with average returns. It's not about getting rich overnight. It's about building freedom over time. And I see so many people in their 20s or 30s who have the potential to become financially free, but they're not taking advantage of what could be their best years for investing. So here's the plan if you want to get started. Step 1. ETFs, or exchange-traded funds, are one of the best tools for long-term wealth. Why? 3 reasons. 1. They're diversified. One ETF holds hundreds of companies. 2. They're low cost. Most charge under 0.1% in fees. That's less than $1 a year on $10,000 invested. 3. They're simple. You don't have to pick winners, you just ride the market. Here are a few of my go-to ETFs. VTI, this covers the entire US stock market. VWO or ESEP. These track the S&P 500, the most popular benchmark for large US companies. VEA, this invests in developed international markets like Europe, Japan, and Australia. VWO, this covers emerging markets like India, China, and South Africa. A simple combo like 80% VTI and 20% VEA or VWO already gives you global exposure with low fees and solid growth potential. And if you want to supercharge returns, allocate a small part, say 10 to 20% to individual stocks. Step 2. Picking your stocks. Look for 3 things: strong fundamentals, consistent revenue, and earnings growth, and long-term trends like AI, green energy, or digital infrastructure. Think companies like Apple, Nvidia, Amazon, or future-focused plays that you truly believe in. But never go all in. Stocks can fly, but they can also crash. Step 3. Your asset allocation. Here's a rock-solid structure if you're starting today. 70% total market ETF like VTI, 20% international ETFs, a mix of VEA and VWO, 10% individual growth stocks. You could also tweak this based on your risk tolerance. Want more stability? Shift 10-20% to bond ETFs like BND, Total Bond Market, AGG, Aggregate Bond Fund. This helps cushion your portfolio in volatile years. Step 4. Automate. Use platforms like Vanguard, Degiro, Revolut, or Trade Republic. Set automatic monthly deposits, reinvest dividends, and check your portfolio once a month, not every day. Investing should feel boring. That's how you know it's working. So there you have it. Your 20s and 30s are the prime years for investing. Building wealth isn't about getting rich quick, it's about consistent growth over time. ETFs, a few solid stocks, monthly investing, and patience. And remember, no one knows when the market will rise or crash, not even the pros. Trying to time it right often leads to missing the best days. The smartest investors focus on time in the market, not timing the market. The earlier you start and the longer you stay invested, the more you'll gain. This approach isn't sexy. It won't make you rich in 6 months. But it does work, and it works for thousands of people who are quietly building financial freedom in the background. If you're consistent, even modest investments can turn into hundreds of thousands over 10, 15 years. The secret: don't quit, don't panic, and don't chase hype. Now hit like if this helped you. Subscribe for more no BS investing advice and let me know in the comments. What's your go-to ETF or stock pick right now? See you in the next one.